Hi everyone, welcome back to Corporate Decoder, the place where we unravel the wild world of corporate finance. And let me tell you, TPI Composites just filed a report that's got more drama than a season finale cliffhanger. This company, TPI Composites, makes massive parts for wind turbines. You know, those giant things that spin to make clean energy. They've just released their latest financial report and it paints a picture that's, well, let's just say it's not exactly a sunny day at the wind farm. Alright, so TPI Composites is filing their quarterly report, a 10Q for the period ending June 30, 2025, and right off the bat there's a pretty big storm cloud hanging over them. This report starts with a massive bombshell. On August 11, 2025, TPI Composites and some of its subsidiaries filed for Chapter 11 bankruptcy. Now, what does that mean in plain English? It means they asked a bankruptcy court for permission to reorganize their debts and finances because they were having serious money problems. Think of it like a company asking for a timeout to sort out its bills. And it's not just a little money problem. The report explicitly states there's substantial doubt about whether the company can even keep operating. This is a big deal. It's like a doctor saying, "We're not sure this patient is going to make it without a major intervention." The company admits they're basically flying blind in many areas, and you can see it in the forward-looking statements. They're talking about their ability to fund our planned operations for the next 12 months, and their ability to continue as a going concern, phrases that scream trouble. They're also upfront about the risks tied to bankruptcy, like dealing with court approvals and the possibility of their stock becoming worthless. Honestly, it's refreshing to see this kind of transparency, even if the news is grim. Let's dive into the numbers. Take a look at the balance sheet. On June 30, 2025, their cash and cash equivalents were around $106 million, a pretty big drop from $19.6 million at the end of the previous year. That's a lot of cash disappearing. And check this out, their current liabilities, the money they owe in the short term, were nearly $1 billion, specifically $981 million. That's a huge amount to owe, especially when their total assets were only about $591 million. This means they owed more than they owned in the short term. And then there's the accumulated deficit, which is basically all the losses the company has piled up over time. It's a staggering $893 million. That's a colossal amount of red ink. Now over to the income statement. For the second quarter of 2025, they reported net sales of about $276 million, which is down from $300 million in the same quarter last year. That's a drop of about 10.8%. But here's the kicker. Their cost of goods sold, the money it cost them to make their products, was actually higher than their sales for that quarter. They spent $305 million to make products they sold for $276 million. That's a direct loss on every sale. This resulted in a gross loss of almost $30 million for just that 3-month period. When your basic cost of making and selling something is more than what you sell it for, it's a sign of very deep trouble. They did manage to cut down on general and administrative expenses, which are things like salaries for office staff and other operating costs, bringing them down by about half compared to the previous year. That's a good move, but it's like putting a band-aid on a gaping wound when your core business is losing money on every sale. They also had a loss on selling assets, which means they had to sell some of their stuff for less than it was worth, and that loss was more than double compared to last year. And look at their other expenses like interest payments. Those went up significantly, with interest expenses alone being almost $25 million for just 3 months. That's a lot of money just to service their debt. All of this combined led to a net loss from continuing operations of almost $69 million for the quarter. That's a huge number for just 3 months. They also had some discontinued operations, which means they sold off parts of their business. For the automotive business they sold last year, they reported a big loss in the same quarter last year. This is basically just wrapping up old business. Interestingly, they reported an income tax benefit this quarter, meaning they got a tax break. This usually happens when a company is losing money, and talking about those discontinued operations, they made a tiny profit of $348,000 in the second quarter of 2025. This is from selling off their automotive business last year. It's a positive number, but it's a drop in the bucket compared to the company's overall struggles. Looking at the 6 months for 2025, the picture doesn't get much prettier. They had sales of $612 million, but their costs were a whopping $655 million. Again, they're losing money on the core business of making and selling wind blades. And those startup and transition costs, which are expenses related to getting new operations running or moving things around, they were almost $17 million for the 6 months. That's a heavy burden when you're already losing money. They also had about $14 million in depreciation and amortization, which is how they account for the wear and tear on their equipment and buildings. This all adds up to a really bad cash flow situation. For the first 6 months of 2025, they used over $21 million in cash just to keep their operations going. It's like the company is bleeding cash. They also spent about $10 million on investing activities, like buying new equipment. And their financing activities show they borrowed and paid back money, but ultimately ended up using about $56 million in cash through financing for the 6-month period. It's clear they're struggling to generate cash. This is reflected in their cash balance. By the end of June 2025, they had only about $117 million in total cash, down from $2,000 million at the start of the year. That's a massive drain on their readily available funds. Now, to the really critical part that explains why their cash has dried up and they filed for bankruptcy. On August 11, 2025, they officially filed for Chapter 11. This means all their debt suddenly became due immediately, and that's a huge financial blow. Adding insult to injury, they also got a notice from Nasdaq saying their stock price has fallen too low, below $1 for a sustained period. They have a limited time to fix this or their stock will be delisted from the main stock exchange. This is another sign of deep trouble. The report pretty much screams help needed in multiple places. They're talking about a labour strike in Turkey that started mid-May 2025, which shut down their factories there. They also had a temporary shutdown in Mexico due to a safety issue. These operational problems, combined with high costs and a tough market, are clearly hurting them badly. Looking at the sales figures broken down by region, their sales in Mexico are up, which is good for that specific area. But in Europe, the Middle East and Africa, sales are down by more than half, and in India, they're also down. This shows a real struggle to maintain business across different parts of the world. Specifically, the EM region saw sales drop by over $57 million for the quarter. That's a 54.9% decrease. This is largely blamed on that strike disrupting production in Turkey. And even though their sales are down, their costs are still high. They reported over $305 million in costs for the quarter, which is actually quite a bit less than last year. So they're trying to cut costs, but it's not enough to overcome the sales drop and other issues. They did cut general and administrative expenses by nearly half compared to last year, which is a significant saving, but as they say, it's not enough. And that loss on selling assets more than doubled. They're selling things off probably to raise much needed cash. Their interest expenses are up almost 10%, meaning they're paying more to borrow money. All of this leads to a bigger net loss from their core continuing operations, up by about $7 million this quarter compared to last year. It means the problems are getting worse. The small profit from selling off their automotive business is a tiny bright spot, but it can't hide the main problems. For the first 6 months of 2025, their net loss from continuing operations was almost $117 million, a slight improvement from last year's loss of $124 million, but still a massive loss. The amount of cash they're losing from just running the business is also significant, with over $21 million used up for the 6 months. They're spending less on new equipment, which might be a sign they're conserving cash because they have no choice. And the financing side shows they're clearly struggling to get new loans or manage existing ones with a big cash outflow there. Their cash position has been hammered. From $27 million at the start of the year, they're down to just $117 million at the end of June. That's a drop of almost $90 million in 6 months. The bankruptcy filing is the main story here. It triggered a default on their loans, making everything immediately due. This is a company in crisis. And the Nasdaq situation shows how bad things are. They're close to being kicked off the main stock market. Honestly, this report is a wake-up call. The company is in serious financial trouble, facing operational disruptions like strikes and shutdowns. On top of massive debt and the stigma of bankruptcy, they're selling assets and cutting costs. But the core business of making wind blades is bleeding money. The chances of existing shareholders getting anything out of this seem very, very slim. It's a classic case of a company overextending itself and then hitting a wall. The focus has clearly shifted from growth to survival. It will be interesting to see if their restructuring plan can actually save the company. But right now, the outlook is bleak. Alright, that's our look at TPI Composites' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.